I'm very, very excited to be here. And I actually do appreciate you guys taking the time out of your busy schedules to tune in and listen to the today's webinar. And as Teresa mentioned, numbers never lie. I'll get to that in a second. So I'm just going to start sharing my screen. You guys just let me know if you can see and hear me well. So perfect. Okay. Okay. Is it good? Perfect. Okay, wonderful. So as Teresa mentioned, it is 11 years doing in Durham, which is extremely exciting. And I'm very, very happy to participate in the event, and it is very exciting. Just a quick thank you to 2023 sponsors and collaboration partners, as you can see here on our screen. So just take a quick look. And before I start my presentation, so again, I'm Michelle Herscu. I'm a chartered professional accountant, and I started my accounting firm, MLHC, just a few years ago. I have a lot of information to share with you. I know it can get a little bit overwhelming at times, so I'll try my best to take it slow. And also, if you have any questions, please let's discuss that at the end, because you might get some of your answers as I go through my slides. I always like to start with a very, very quick disclaimer, just to kind of like let everyone know that the information today is just general, and it obviously does not take into account any of your personal situations. So it does not replace an actual consultation from an accounting or financial professional. So I just want to make sure that that is said and everyone understands that. But of course, you're welcome to reach out after the presentation, ask any questions. Okay, so let's dive right in. And again, thank you. Okay, so I guess we're all here for the same reason. Congratulations, you've started a business. Now what? As I said, it can get very, very overwhelming. So the first thing I really wanted to cover is the big elephant, which is CRA, which we all love. So let's start with this. Okay, so CRA, what is it that you actually need to set up with CRA? I get a ton of questions about that from new business owners. It is very overwhelming, very hard to navigate. They do not make it simple. I don't know why, because ultimately they do want our money, so they should be making the whole setup a little bit easier to navigate, but they don't. Okay, so generally speaking, what you would need as a business owner are these three accounts to begin with. So you would need access to your personal and or corporate account online. And again, this is all online, so I always recommend to go with the online option when it comes, specifically when it comes to CRA, because this way you can just get all the communication and do everything directly, and you don't have to wait for any of their correspondence to come via mail. Remember, they do not send any emails. So if you ever need anything, it's either calling them and waiting gazillion of hours, or try to do whatever you can online. So what I'm talking about is really how to set yourself up online. So as I mentioned, the first account that I would like for you to set up is anything that has to do with your tax. And keep in mind that the personal and the corporate are two separate accounts, okay? The other one would be anything that has to do with GST, HST. And the last one would be a payroll account in case you are on payroll under your own corporation or you have your own employees that you need to pay to. Okay, so the first one we're going to cover is in terms of the taxes. So first you need to establish whether you're operating as a sole proprietor, a partnership, or a corporation. These are three different types of business structure that you need to establish which one you fall under. And then once you do, you would register your business with the province So let's say with the province of Ontario, if you're a sole proprietorship, you need to register if you are operating under a name that is not your personal legal name. So let's say, for example, if I'm not operating under my name, Michelle Herscu, and I want to operate under Numbers Never Lie, even if I'm a sole prop, I will need to register with the province of Ontario, and federally with CRA under the tax accounts and GST and payroll that I just mentioned, which is the third line. So register CRA business accounts. So when it comes to a sole prop or partnership, which I'm assuming most of us here on the call fall under this category, so you don't have to have an account with the CRA, the business side, unless you're starting to collect GST, HST, okay? And or you have any employees working for you. So if you don't have any employees working for you and you're still not at the point where you're collecting any HST or GST, you do not need to register with CRA as a business. And again, this is only under the category of a sole proprietorship or partnership. In that case, your tax liability only pertains to your personal taxes, where you will also report anything that has to do with your sole prop activity. There's a specific form there. Your accountant should know about it. And that's where all the reporting goes under. So again, you will only need a personal tax account. And once again, I cannot recommend this enough. Please do it online. Make sure you have access to a personal account with CRA online. Now, if you are a corporation, it's a bit of a different story, because then you will need to register your business with CRA immediately for your corporate taxes to be done. Other accounts that might be relevant, same idea as we chatted before, the GST, HST account, as soon as you start collecting it, and or payroll in case you have any employees or you are the employee of your corporation, then you will need the payroll account. What I've done now is I prepared a quick cheat sheet if you guys either want to take a screenshot or just quickly review it. When do you actually need to set up the account? So again, I split it between the sole prop / partnership and the corporation. GST, HST account and the payroll account are both the same. Doesn't matter what your business structure is. Before you start collecting or before you onboard new employees, that's the only times when you need to set up these accounts. Corporate tax account, obviously not applicable to sole prop, but is applicable to a corporation. You could postpone the registration of the corporate tax account until the time you need to file your corporate taxes, but I don't recommend doing this because by that time you will be busy chasing your accountant, giving them information, and it's just going to be one more thing to worry about. I would just say, get it over with, do it immediately as you start the corporation. Okay. The next thing I would like to review with you is talk a little bit about the GST and the HST requirements, because again, that's another topic we do get a lot of questions on all the time, and I would love for you to understand how that works. So first of all, we'll start with what is it, the HST and the GST. So that represents the sales tax. And as you all know, we're in Ontario, so the HST is actually the combined federal and provincial tax rate, which is 13%. So we know what it is when we go out and buy stuff, because we always know that there's HST added to that. But as a business owner, once you're registered for HST, you're actually going to have to collect that from clients as well, or from your customers. So you need to understand that this is not your money. This does not belong to the business. This belongs to the government 100%. And the way this works is you would take all the HST that you've collected from your customers and you deduct the HST that you paid. The difference is what gets remitted to the government. Okay? Now, when is it actually mandatory to start charging that? When you are hitting 30K in sales over 4 consecutive quarters, you need to start, not start, but you need to register for HST or GST if you're in BC. And the note that I put there is because I did get that question. It only pertains to self and your business. So I know some of you might have a part-time or a full-time job and you guys do the business on the side. So the 30,000 pertains only to income from the business. It's not combining your income, like your personal T4 income plus the business. Okay, so just keep that in mind. In terms of your filing and payment deadlines, so most of you probably fall under the first category, which is the annual filing. And that is when your total sales from the business is under $1.5 million. When it goes between 1.5 to 6, then you have to file quarterly. And when your annual sales exceed 6 million, that's when you need to start filing monthly. Hopefully we all get there at some point. Okay. In terms of the payments deadline, so this one gets a little bit tricky. So let's assume you registered for HST a couple of years ago. So you've already had 1 year where you've paid your HST and your HST total owing balance was more than $3,000. You should be getting a letter from CRA saying that this year they would expect you to make quarterly payments based on last year's performance, which was more than 3,000. They don't always send that letter. So just keep that in mind, because what happens if you're not making these installments, I mean, it's not the end of the world, but you are going to get interest charges and penalties. So it really depends on how much you owe at the end of the year, where they will do the calculation for the interest and the penalties. It can be a few tens of dollars, or it can be like a few hundreds. It really depends. So I always say, keep an eye. This money is not yours to begin with. Just pay it quarterly and get it over with. Okay, so again, I want to do like a quick recap in terms of the annual compliance and the compliance obligation that I want you to keep in mind. So in terms of the GST, HST, after you register, just make sure that you review the confirmation letter that you got from CRA, because this letter would say what is the filing frequency obligation and your payment deadlines. If you're not sure, just ask your accountant, okay? These are easy questions, and they should be able to assist you with that. And a kind of like a quick cheat sheet also, just make sure you're adding all the deadlines to your calendar so that you're not missing anything. Do not try to keep track in your head, because for sure you'll miss that. In terms of taxes, again, we have two that we need to keep in mind. We have the personal taxes that are always due, okay? And by due, I mean the filing and the payments. They're due by the April 30th of the following year, which I'm sure everyone knows that date. If you are a sole prop or a partnership, you can file by June 15th. So you do get a little bit of an extension, but keep in mind that the payment was actually due April 30th. So it's before, which is very annoying. If your taxes are only done on the 15th, you have to estimate how much you're going to owe and pay it by April 30th. With corporate taxes, it's again the same idea. I don't know why they did it like that, but they're actually due 6 months after your end of your fiscal year. Okay, do not confuse that with the calendar year. Calendar year is December 31st. Your fiscal year can be at any time. It can be January 31st, February 28th, etc. But the payment, if you do owe any taxes, is due 3 months after your year end. So again, same as with the personal, it's before the due date, which again is very annoying, but that's just the way it is. In terms of your payroll, there are either monthly or quarterly remittances that you need to provide to CRA, and you also need to do payroll reporting. And then there's the annual T4 filing. I do want to say that it is one of the most sensitive items when it comes to CRA and employees, so I strongly recommend not to attempt to do it yourself. I cannot stress this enough. Yeah. So if you need to pay someone $50 a month to do it. Because it's very, very easy to mess it up, especially if you have your own employees and it's not just you. Okay, let's jump into my next very favorite topic, which I really enjoy talking about, and that is maintaining your books. Very, 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 very important. Again, cannot stress this enough. Okay, so what is actually bookkeeping? So bookkeeping is the activity or occupation of keeping records of the financial affairs of a business. So what it actually means is you need to record the funds coming in, you need to record funds going out, you need to reconcile all the bank accounts, the credit cards, the loans, lines of credit, etc., everything that is that belongs to the business. And the last thing is that you need to produce the financial statements, which are mainly the ones that we usually look at is the P&L, also known as the income statement, which is the sales minus the expenses, and the balance sheet. Now, why do I say that it's really important to your business? I guess the question that I'm going to ask is, would you ever go to work for someone not knowing how much money you're getting at the end of the month? No, I don't think anyone would do that. So why won't you treat your business as an employer so that you know what's coming in at the end of the month? It's the same idea. And that's just one of the reasons that you need to have your books in order. I always say that you cannot run a business without keeping your books in order, and Excel won't cut it. I know a lot of small businesses use Excel. I think it's wrong. I think you can get away with it for the first few months, but as your business grows, it's just going to become a disaster. And if you are collecting HST, that's just a recipe for disaster, and you're asking for trouble. Proper bookkeeping really gives business owners a solid overview of their performance. Please, please, please keep that in mind. It provides information that allows you to make strategic decisions. You cannot make any decisions for your business without understanding and knowing your numbers. And you also have to make sure that the numbers are correct, right? CRA can actually ask for your bookkeeping records. And that's why I always say you can't wing it. I've talked to so many people who have gone through CRA audits. It is a nightmare, okay? However, if you have an accounting software that you're using, a bookkeeper, or you're a qualified bookkeeper and you can do it yourself, perfect. All you have to do is a click of a button, and then you can provide CRA all their backup. Otherwise, you're wasting days and countless hours on fixing everything, making sure that it matches what they're looking for. That's, to me, is a big no-no. If your bookkeeping is inaccurate, then obviously your financials are going to be misstated. And that can be a huge issue with your taxes. But also if you're requesting funding that's reliant on the statements. So any grants, any loan applications, they're always going to ask for your statements. You have to make sure that your statements are correct. Okay, you can't say that your sales were $200,000 last year when they were actually 50. Okay, you have to make sense. You have to make sure that everything is substantiated. Everything, of course, is legal. I've had cases with sole props, especially where they told me that their income was over $100,000. But then that income actually included partially HST. No, it all has to be separated. you need to understand there are implications to making these mistakes. Okay, it just means you're going to end up paying more taxes. So nobody wants to do that. Okay, so things you have to know as your business grows. So the first thing, again, numbers. Know your numbers. So important. If there's one thing that you can take from today's presentation is understanding your numbers, knowing your numbers, being exposed to it. I've also talked to a lot of business owners that do have bookkeepers that do their books, but they never provide them with the statements. So it's great on the one hand because we know that their bookkeeping is being done and it's dealt with and it's correct, it's accurate, it's everything. That's wonderful. But how are you making decisions if you actually are not seeing your numbers? So make sure that your bookkeepers are giving you the financial statements at the end of every month and share the numbers with you. So again, through the bookkeeping and the maintenance of all your records, you can actually get the final result of the financial statements. And the main statements include, as I mentioned before, the profit and loss statement, or again, also known as the income statement. This is essentially your income, so all the sales that you've made less the expense. So the bottom line that everyone usually looks at. The balance sheet would be your assets, liabilities, and equity. This is more for the corporate businesses. And a cash flow statement, again, usually we do talk about that, but that's more for corporations. But still, as a sole proprietor, you should understand what that means. And just a quick secret, I guess, to share with you, usually your bottom line does not equal your money in the bank account. That's something that a lot of entrepreneurs get confused about. And there are reasons around it, but again, you should talk to an accountant that understands this whole concept. They should be, and then explain this to you in more detail so that you can also make decisions and plan for the future. Especially if you have some big expenses coming through, you need to know exactly when you can spend that money. So once this step number one has achieved, it's really time to move on to the next step, which is the analysis that I absolutely love, and it's an integral part of every single business. So what it actually means is that you need to review the statements in depth. You need to calculate your margins, your ratios, and any other KPIs that come to come up with a set of conclusions. And I'll give you some examples so that it makes more sense. So for example, one thing I really love to do is to look at the revenue on a year-to-date basis. Okay, so let's say your fiscal year started January 1st, and you want to look at everything until the end of October. Okay, because now we're in the middle of November, so we're still kind of working through the month. So we want to look at the first 10 months of the year. So we're going to look at January to October 2023 and compare that with the same period in 2022. We can do that. We can look at October versus October, so this year versus last year. We can look at the same quarter this year versus last year. And you start assessing the performance, and you need to ask yourself questions like, why is the revenue level at the level that it is this year? It could have gone up, could have gone down, but you need to review it and ask questions. You need to look at the gross profit. If you have inventory, there's a lot of e-commerce businesses out there that actually have merchandise. They sell it on Etsy or Shopify. You need to understand the frequency, the inventory turnover. What does it actually mean? How do you make like any conclusions upon that? And you need to understand the net profit before tax. And there's so many other things that you should be looking at to make decisions. And as a business owner, what do you do with this information when you look at that? So as I said, you would compare them to last year's performance. You would compare the cost as a percentage of the revenue. So for example, I don't know, I'm just going to take a simple expense like dues and subscriptions. Let's say this year they were 20% of your sales, but last year they were only 5%. So then you need to ask yourself, why is this jump? Why did I jump from 5% to 20%? What's the reason behind it? You need to actually look at every single line item and make sure that you have the answers. You should also look, for example, at the debt that your company carries this year versus last year. If you've got any loans from the bank, why do you have more debt? And it's okay to have more debt, but you need to understand why. Like, did you take more debt because you wanted to invest in the company and purchase maybe equipment, or get a special funding for I don't know, digital, digitize your products, go online. Again, you as the business owner need to know all the answers to that. So as I said, kind of like I'm summarizing my last slide. So you've gone through all the steps. You need to assess the results. You need to ask yourself tough questions. And why isn't the revenue this year as high as last year? Did something happen this year? Is it out of your control? Is it the global economy that sucks? Why are your margins lower this year? What does it actually mean? Maybe the costs have gone up. You know, again, a lot of e-commerce businesses are struggling with the cost of shipping because it has tremendously gone up this year. Maybe that your spending got out of control for the business. Maybe you were, you know, interested in buying too many, I don't know, investing in new software, but maybe it doesn't make sense for your business to make that investment at this point. If you paid yourself less this year, why? Why? So really making decisions consists of getting answers to these tough questions. So for example, if your sales are lower because your efforts this year were not that great, then maybe you need to increase your own personal involvement in bringing new clients to the business. Or you need to invest in sales or marketing company to do it on your behalf or together with you. If your debt increased, but your business hasn't really made any substantial investments, then that might be a red flag that you need to look into and decide on maybe a quicker payment plan, like a debt repayment or refinancing for better terms. Again, depends on your business and depends on your needs. I also don't know, but if you guys know this, but any sort of financing or refinancing or debt relief, whatever that might be, you have to provide up-to-date financial statements, which goes back again to the point that I mentioned before. Make sure your bookkeeping is done. Please don't try to DIY this unless you are certified. Use an accounting software and make sure that it's done on a regular, ongoing basis and that you review your numbers. The other thing that I wanted to mention is this is kind of like your next step in terms of like growing your business. So after we discussed everything, we actually got to a point where, okay, it's time to set KPIs, which are key performance indicators, and SMART goals. And by SMART, I don't mean intelligent. SMART actually stands for specific, measurable, achievable, relevant, and time-bound. These are your goals for the business, which generally tie with your personal goals. So we know that growing a business is really tough and it's not for anyone. But if you have the right support in place, and you should have it, you can take it anywhere you like. So I always recommend to do a deep dive into your vision and your goals. Where do you want to take your business in the next 5 to 10 years? Why? Why is it important to you? And what are your goals? It's really only through this process that you can create your goals monthly, quarterly, annually. And from this analysis that you have on your business performance, you should pull out KPIs and incorporate them into part of the goals. And by KPIs, I mean, for example, we're going to decide that we're going to have a revenue of 250,000 by September 30th, 2024. Okay, so how do you measure that? You have to look at it monthly. Let's see where we're at. How far are we from that goal? Why? What do we need to adjust, to tweak? Maybe you need to hire an administrative assistant. And then you say, okay, I'm going to hire that admin assistant, but this is the budget that I have. I have 50K, and I'm going to be doing it by March 1st, 2024. So that's a goal that you have. Okay, so how do you measure that? You measure it by looking at where you are today versus March 1st. Did you start interviewing? Did you even post a job out there on Indeed or whatever job board? Did you start, like I said, interviewing? Did you start screening? Another goal is to get 20 clients by January 30th, 2024, because you've decided that you're going to attend X amount of networking events. So same as we do today, we introduce each other, we talk to one another, we get ideas, we get to know each other's services, we might share referrals. So this might be another way of obtaining that goal of getting 20 more new clients by the end of January 2024. So what I'm trying to say here, and I really hope you can see the bigger picture, is that everything starts with the bookkeeping. So step number one is, of course, the compliance. Make sure you register with CRA and you understand exactly what your deadlines are in terms of payment and filing, because you want to get that piece over with and done and make sure that, you know, it's all set to go and you don't have to worry about that. Okay. And reducing the worrisome levels or the fear or whatever that is goes through proper planning. Okay. And then the second piece of things is just making sure your bookkeeping is done properly. Don't use Excel, use an accounting software. And the third piece is to do an analysis of everything, go through the numbers on a monthly basis. Some of the business owners go through it every week. It depends. It depends on what stage in the business you're at. Make sure you understand what the numbers mean. And you need to ask yourself tough questions. Why is it this year I'm doing this, but then last year I was here, right? So understand where the discrepancy, where the difference is coming from, because this is the only way you can make adjustments. And then after you've done all of this, you should really sit down and create your vision for the business, your goals. I always say you need to have a long-term goals in mind and also short-term. And then once you've done that, you need KPIs. KPIs would be, how do you measure that you're getting towards that goal? Okay. And if you haven't, again, you have to recalculate and see if there's any changes and adjustments that you need to make in order to obtain your goals. And this is the best ways to grow a business. Okay, I think I am done, and I would love to get some questions. I hope I haven't confused anyone, but yeah, please feel free to ask anything.
Michelle, thank you so much. That was very clear, I think, for me. I'll give you, and I would love if anybody has any questions, but the challenge that a lot of our clients get into is getting confused between the registration of a CRA account and a business registration, because CRA uses confusing language. But when you're a small business and you're wanting to register, or if you're wanting to register a sole proprietorship, it's a different registration than the HST or the CRA business number. So sometimes that language gets confused. So just if anybody on here is going through that process, I'd be happy to discuss that with you to make sure that you don't get confused between the two. It's two separate registrations for two separate reasons. Yeah. I don't know if anybody has any questions for Michelle. I know I answered some questions, and one of the Althea actually asked a really good question, and then I thought that you covered a lot of it, but maybe you can even add to this. She said, how do you suggest making decisions for your budgeting and your planning for next year when most of it's out of your control?
That's a good question. I guess my question back to that would be, why is it out of your control?
So I'm a service-based, I'm a psychotherapist. So
Mhm.
what's happening, what I'm noticing in the last little while is I'm in private practice. So costs definitely impact, how much people can afford our services. That and the other piece that I've been noticing in the field too, there almost seems to be a surplus of therapists. So then now it's like, there's so many. So again, clients can choose. So again, all of these things are really out of our control, other than the fact that, I can brand better and market. I can do all those things and invest in it. But at the end of the day, it's like, those are things I can do in my control. But in terms of planning and budgeting, I'm
Mhm.
kind of finding it a little hard to decide, what to do next.
Yeah. Okay. That's fantastic. I'm actually really happy you asked that question. So any business has competition, and there's a ton of things that are out of our control. So we can only control what we can control, right? So I would say the best thing is to actually put a budget in place. And the budget is always an estimate. Okay. So maybe you can, start an Excel spreadsheet for budgeting purposes. Yes, please use Excel. And try to estimate, okay, I think I can have 5 clients per week for, I don't know, I'm just throwing out a number here, $150 per session. So this is how much per week, this is how much per month, and then start plugging in the expenses that you're going to have. Some of them, as you mentioned, are out of your control, but then you can also budget, let's say for marketing, I'm going to budget $500 a month. Okay, so plug that in times 12. And then see where you're at. So this would be step number 1. Step number 2 is, and again, this is true even when we look for a job, even if we don't have a business, there's a million candidates out there, right? So we always compete with one another, and that's normal. That's just part of a normal economy. You have to take matters into your own hands, and for example, that's why I gave the example of participating in networking events, because you need to get out there. You need to be on social media, you need to know other people, you need to meet them for coffee. If it's online, if it's in person, you need to get your name out there. You can ask for referrals from existing clients. There's a few things you can do, obviously, and again, marketing. So these are the things that you can control, and you should be doing them, because there's always going to be competition. Doesn't matter what type of business you are. There's a million bookkeepers, but that doesn't mean that my firm cannot compete with them, because we each have different service levels. And it's all, at the end of the day, especially in your profession as a therapist, at the end of the day, it's about the human connection and who we feel the most comfortable with, that we choose to work with that individual. So I hope I gave you a little bit of something that's going to help you with your budgeting.
I think that was a great answer. Thank you. A couple of people asked, what are some good bookkeeping software that we should be using as one small business person?
So I would say for sole proprietors, you can use Wave Accounting. Wave is a free bookkeeping software that I personally like. I think it's perfectly fine to use that. But my only request, if you do start using it, is just make sure you set it up correctly. Because if it's not set up correctly, and that's true for any accounting software, you will get the wrong output out of this. So just make sure there are a few elements that need to be looked at when you set it up, and then you're good to go. So just make sure you do that part well. And the other one that we always use is QuickBooks Online, that we just love, and it's great for growing businesses.
Michelle, another question about Wave. What I like about Wave is that you also can connect your bank accounts and your credit cards, and you can also get online payment of your invoices. So that's a nice setup as well for small businesses. What about if you're managing inventory? Does Wave help you with that as well as QuickBooks, or should you, what's your suggestion in that case?
I love that question. And I'm very happy that someone asked it. Okay, the best recommendation I can give you, and I know this is going to be on YouTube and I'm going to be hated for it, but do not, under any circumstances, use QuickBooks for inventory management. Okay, that's not a good solution. And Wave doesn't even have a solution. So I would say, generally, if you're just starting out and you don't have a lot of inventory, yes, you can use Excel, okay, to keep track of everything, to keep track of the amount of inventory items and their cost, so that you can get the final number every month. And then you can give it to your bookkeeper or your accountant to plug it in, make sure that the inventory balance matches and that the cost of goods sold are recorded correctly. As the business grows, if it's hard to maintain track of the inventory, or if you have work in progress, depends on the type of business that you have. At that point, I would recommend to research inventory software. There are a few good ones in the market, but it totally depends on the type of business that you have, your needs, and the budget.
Yeah.
So I hope that helps.
Okay, yes, it does. Thank you. Tareen asked, do you offer help setting up new businesses with maybe like an hour's meeting to say, yes, let me help you set up your books properly and kind of show you what you need to do, and then that kind of thing. Is that something you do?
Yes, actually we do. And I do have a meeting at 2 p.m. with someone.
Good.
That's setting up Wave.
Good. Another question, is a business required to charge PST to out-of-province customers?
Great question. So actually, to go back to the HST and GST, you should probably visit the CRA website, because if you provide services to a customer that's out of province, you might actually need to charge them the HST that pertains to their province. So for example, we have some clients in BC and we need to charge them the 5%, not the 13%. So make sure you actually understand the rules. PST has different rules. So for provinces that have their provincial sales tax portion, so like again, BC has the 5% GST and the 7% PST, they have their own rules when it's required to charge the PST. You should go to the Ministry of Finance. I'm guessing you're asking about BC, but it can also be other provinces. You should go to the Ministry of Finance, BC. They do have some really nice PDF files there that break down when you're required to charge PST. And I also think that if you have a home-based business with less than 10K in sales, then you don't need to charge that. So if it's just a service that you provide, there might be some conditions when you need to charge it, but generally it's more for goods and if you're actually in that province. So I would say step number one, go to the Ministry of Finance for whatever province you're inquiring about. Read, make sure that your category is in there mentioned and you have a clear understanding. The third step, I would actually say to email the Ministry of Finance and ask them your question, because they all usually get back to you relatively quickly. And then this way you will also have their answer in an email. So, you know, backing yourself, making sure that it's not your understanding, but it's exactly what they said, in case anyone ever asks you that question in the future.
Perfect. I just put your contact information back in.
Oh, I can just share this. Yeah.
And then, yeah, thank you. And then another question here. When it comes to the CRA, is it better just to get a number so you don't have to worry about having to change it in between fiscal years?
Not sure I fully understand.
No, because you only get it if you have to payroll, if you're going to charge HST, or if you're going to do importing and exporting. Those are the reasons to get, or corporate taxation if you're a corporation.
Yeah.
Right.
Yeah, actually, that's a good point, Teresa. I did not talk about import-export, but that's another CRA number that you might require if you are in that business.
So I hope that helps, Chantel. So you only get it if that's the case. And somebody also asked the question, what happens if I start out not charging HST and then I have to charge HST and I'm a corporation, and when is it a good idea? So I don't know if you want to answer that question.
I can give a general answer.
Yes.
Honestly, truthfully, I would register for HST from day one. And there are two reasons why I recommend that. Reason number one is because this way you can get actually a little bit of HST refund your first year in case your sales are lower than your costs. And then the HST would be in a credit position, so you get some money back. And then the second reason is I think it looks a little bit better when businesses work with someone that is registered for HST. It kind of looks like you're more established, more responsible maybe. So these are the main two reasons I usually recommend registering. But again, you don't have to before you hit that 30K mark. Yeah,
exactly. And that's what happens with a lot of our clients. Many of them go, okay, I won't register yet. But I always say it matters it depends who you're selling to and what they care about, who your customers are. It depends on your vendors, like what they require. It also depends how you want people to perceive you and how much money you need to invest into your business. So, makes a difference. Yeah,
that's true.
Any other questions, anybody? Michelle, I thought this was very helpful for me anyway, and I do like hearing about it for sure.
Thank you.
Hi, I have a quick question, and great session, Michelle. Thank you for all the information. If I'm selling goods on Amazon, then am I required to do an HST on my own, or do you know how that side of things work?
So Amazon is a beast. And it also depends if it's Amazon Canada or US. They have different rules, and I strongly recommend reaching out to their support and get an actual answer by email. It gets tricky. Sometimes they say that they do it on your behalf, which I never really understood how that works. And I would say the best recommendation is to put your HST number or GST number with on their website to make sure that they collect it and they pay it out to you, and then you do the filing and remittance yourself. I wouldn't trust anyone to do it because I don't even understand how that works in terms of CRA. So I would always say do it yourself, but just reach out to them, make sure that your HST number is there, and make sure that they're saying, okay, we're collecting it on your behalf. Here's the HST. You do it.
Okay, thank you.
No
awesome.
problem.
Good. Any other questions, anybody? No? Okay. So
I see one in the chat from Elisa. I don't know if that's answered yet. She's asking, do you work with physical products? Oh, sorry, that's a personal question.
Yeah, sorry. It was for I saw she does distribution in the top. If she doesn't answer, I could always just reach out. I have her contact information.
Okay.
I just thought I'd ask while we're here.
Yeah. Okay. Well, I don't see any other questions. So yes, Dina says, yes, we do. Reach out. Yeah, there you go. Thank you, everybody, for being here today. I appreciate it. I love all the chat and the conversation as well. We look forward to seeing you at the next event. And again, have a good afternoon. We will get this onto YouTube today. You have Michelle's contact information if you'd like to get hold of her and connect with her. And also just thank you, Michelle, for all your knowledge and your expertise that you shared today. It was very valuable, and we appreciate it.
Thank you, everyone. This was my pleasure. And again, thanks everyone for attending. And I hope it made sense and I didn't confuse you more. And thank you, Teresa and Durham Region for for this opportunity. I appreciate it.
Thank you. Take care, everybody. Bye-bye.